This is a story about a dude named Lane. He moved to the mainland and bought one place to stay. And then one day he went try to rent them out. And then he became one real investor man.
A few people have been asking me what is a debt deal and what is an equity deal. Now, an equity deal is found in partnership agreements. Now, like say you and I, we go out and get a duplex or a quad and, we split the down payment costs and become 50-50 partners. Now, that would be an equity deal. You and I are tied to all the gains, and if there's losses, now we split that. We both have equity. And these can be structured many ways, such as JV agreements, joint ventures, or partnership agreements, or just simply with an LLC agreement or operating agreement. This can also apply in private placement memorandums or the syndications I talk about a lot. These are equity deals. A lot of times you'll get a cash flow about 8% per quarter that's preferred. So that means that you may not get it. The lead investor is going to try their best and has underwritten the deal accordingly to hit that. But then the kicker at the end is equity coming back to you. But at the same time, if the investment does not go well, you may not get anything. The other kind of deal is a debt deal. Now, this is you getting a guaranteed or perceived guarantee rate of return. So a lot of these are structured in such a way where the risk is put on the operator. So the very common occurrence of this is a fix and flipper. He'll need $500,000 to do this property, to rehab it, to buy all the materials, and to buy the initial property to fix it up. Now, he may sell it for $1 million and make $500,000 of profit, but you, as the debt investor, has signed up for a rate of return per your agreement. And this is also called private money lending for the investor. So a lot of these, you'll get, say, like 10% back per the time that you have your money out there with the operator. So you'll get maybe about 1% a month in these type of deals. Now, if the operator does a really good job and makes a whole bunch of money, well, too bad. You signed up for a debt deal and you're only going to get your 10% back per year, paid out in different increments, such as quarterly or monthly. But the good news is, let's just say the flipper is not very good and they only make $5. Well, they still have to pay you first. This is just another tool in the toolbox. I'd say that the debt deal is a little more conservative, whereas the equity deal is a little more riskier. And me as an operator too, I would prefer people go with the equity deal because it helps put the risk on the investor too. If you guys have any questions about this, shoot me an email at Lane@SimplePassiveCashflow and maybe we can talk about it.
Not being one of the big boys in investing quite yet, aka the accredited investor in the eyes of the SEC, it's tough to find good options for investing. But then I started investing in the American Homeowner Preservation Fund, or AHP Fund, which is crowdfunding the mortgage crisis in America. The fund collaborates with existing homeowners to keep them in their homes. It's a way to make great returns while feeling good about making a social impact. After investing myself in the fund, it was awesome when they approached me to become an advertiser of the company. You can start investing with as little as $100, and if you want the free Burn Zone book, please send me an email to lane@simplepassivecashflow.com.
Also, just a little news update. There was a recent turnkey provider that filed bankruptcy. When I was introduced to this company, I got a kind of a bad feeling about them, and I thought that their sales team was quite bloated. I prefer to work with some of the smaller providers. At the same time, bigger companies, you would think that would be more stable, but this one just seemed like a lot of bloat and sales teams to me. So if you're interested in knowing who that was, shoot me an email at lane@simplepassivecashflow.com. Again, I'm not surprised that this happened.
This website offers very general information concerning real estate for investment purposes. Every investor's situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.